Live. We are live. We are live. Yeah. Good evening, friends, students, members who have all joined this telecast for this seminar this evening on tax audit. I welcome you all to this session. We have with us Chairman Vijayawada Branch CA G. Srinivasa Rao, as well as today's speaker from Eluru CA D. Chaitanya. Before we start this seminar, I request our chairman of Vijayawada branch, CA GSR, to give his opening remarks.
So, very good evening, members and my dear students. Welcome to the today's session on tax audit, entire government of tax audit. Friends, as you all know that tax audit is being a very, very keen subject, and everyone day in, day out in this part of Vijayawada or in and surrounding Vijayawada are mainly depend on the tax audit. See, friends, while doing your articles, you might be studying about the income tax and other provisions of the act and all these things. The time has come to put the same into the practice. So, while you are scrutinizing the ledgers of the any particular client of your principal, you just kindly bear in mind that you are doing a tax audit of what nature, that is regarding turnover or a profession or a whatever the case may be. You just be in mind 44 A, B, C, D, E, that he will our resource person is going to explain in detail about that. And also, while scrutinizing the ledgers, you should please keep in mind what are the payments that are exceeded 10,000 rupees and under rule 6DD, and while doing the cash book watching. And also, you should see the unsecured loans and all these things, 269 SST and all these things, whatever the things are there. And also, you have to see that PF, ESI, whether paid in time or not, because we have to project the same in 224, that is deemed income concept of employees and employers in 43B. Like that, we have to see whatever the information that is required in the accounts, that is to plowed back and keep it aside for the purpose of disclosing it in the form number 3CD. So likewise, we have to do all the things in a very, very careful manner. Of course, your principals might be telling about the modalities of how to do the audit and everything. But here is from Vijayawada branch of SICASA, what we are doing is we are just having a wonderful resource person from Eluru, that is West Godavari branch of SICASA of ICA, Mr. Chaitanya. Chaitanya is the treasurer of the branch, and he will be going to be introduced to you very shortly. Please understand each and every provision of the tax audit and try to implement the same in your day-to-day activities. Okay, that is my sincere request. And over to Ravi Kishore Garu for introducing the today's resource person Chaitanya to the our members and also our students. Thank you, sir. Over to you.
Yeah. Thank you, Chairman Garu, for your opening remarks. Let me take the privilege of introducing CA Ramana Chaitanya D. He is a commerce graduate and also a chartered accountant, and he has pursued his post-qualification course of ICA. He also pursued his certificate course on goods and service tax. He is practicing since 2015 as a partner of DV Ramana Rao & Co. Chartered Accountants, Eluru. They also have branches at Hyderabad and Visakhapatnam. He specializes in taxation, bank and corporate audit, and also fraud examination. He worked as an assistant manager in Deloitte Haskin & Sells Audit and Assurance in the year 2013 to 15. He contributed to professional journals on taxation and audit. He is a resource person in various professional seminars. Also, he is a managing committee member of West Godavari branch of SIRC of ICA for the term 2019 to 22. He was the SICASA chairman of the branch for the year 1920, and currently he is the treasurer of the branch. With this introduction, I present before you CA D. Chaitanya Over to you, sir. Please start the seminar.
Respected Chairman G. Srinivas Rao Garu, Chairman SICASA, Sir, is my voice audible?
Yeah, please go on, sir.
Respected Chairman of SICASA, Netta Ravikishore Garu, the whole managing committee of Vijayawada branch, my seniors, my fellow colleagues, and my dear students. Firstly, I would like to thank the whole MC of Vijayawada branch for giving me such a wonderful opportunity to talk before you. The reason is, most of you might be knowing, even I was a student of SICASA Vijayawada during my applicability, and I was also a member of Vijayawada branch till Eluru branch was formed. So with this, we will start with the presentation.
Sir, do you want to? Yeah, your PPT is on now.
My PPT is visible now, sir?
Yes.
Yeah. The topic for today's discussion is income tax audit. The first thing that comes into our mind whenever we hear the term income tax audit is, clients not coming to our office on time and properly coming to our office is almost being flagged into the PD. And, there will be very stressful situation wherein, your intention is to complete audit on time. Having said this, the reason for today's meeting is to train you in such a way that you will review the ledgers, you will jot down all the points that are required to be noted in the respective clauses, and then you will push that information to your partner or senior so that he can review it. So this will add a lot of value to your work and your senior or to your partner's work. So with this, we'll get started. Tax audit was introduced in the Finance Act 1984 by insertion of a new section 44AB to the Income Tax Act 1961 with effect from 1st April 1985. Although tax audit is introduced in the Finance Act 1984, it is only applicable after the completion of the previous year. So that is the reason why it is first applicable for the assessment year 1985-86. The objective of the tax audit is to ensure proper maintenance of books of accounts and other records in order to reflect the true income. Proper presentation of accounts will facilitate better administration of tax laws and also to comply with the increasing statutory compliances. Sir, what does this mean? Do we mean to say before introduction of tax audit, returns are also being filed? Then why is there a need for tax audit? The reason being, as Srinivas Rao Garu rightly pointed out, there are certain sections. Say, let's take about the section 40A3, which talks about cash payments on a particular day to a particular person exceeding the limit of 10,000 should be disallowed. So, for verifying the books of accounts and to ensure whether all the clauses in the sections are properly affected, the tax audit is introduced. Right. Every person to whom tax audit is applicable should get his books of accounts audited by an accountant before the prescribed due date, and such accountant should give the audit report and other particulars in the forms prescribed. Here, the accountant is a chartered accountant, and the forms prescribed are Form 3CA, 3CB, and 3CD. Although we will be seeing all these forms in a detailed manner in the later parts of our presentation. Time and again, changes were made in the reporting requirements of tax audit, which widened the scope of audit to a next level. Applicability of Section 44AB. To whom is this Section 44AB applicable? It is applicable to persons carrying on business if his turnover or sales or gross receipts exceed 1 crore. It is applicable to persons carrying on profession if his gross receipts exceed 50 lakhs. It is applicable to persons carrying on businesses if profits and gains from the business are deemed to be profits and gains of such person under 44AE, 44BB, 44BBB, and he has claimed his income to be lower than the profits or gains of so deemed. So let's pause here. What does this clause C mean? Say, for example, let's talk about 44AE. 44AE is a deeming provision which is applicable to persons carrying on plying, hiring, or leasing of goods carriages. What does that particular section says? That particular section says if you are carrying that business and you are mandated to declare your net profit as 1,000 per ton per month or 7,500 per month as the case may be. Sir, here I have a question. What if there is a loss in that particular business? Even in that case, are we required to declare our income as per that 1,000 or 7,500 as the case may be? As an option to get his books of accounts audited under section 44AB and to declare an income which is lower than the deeming fiction created as the case may be. Then clause D. Carrying on profession, if profits and gains from profession are deemed to be the profits and gains of such person under 44ADA, and he has claimed his income lower than the profits and gains so deemed to be the profits and gains. Sir, what does this 44ADA says? This 44ADA talks about persons carrying on profession. In that case, he has to declare 50% of his gross receipts as income. Say if his income is less than 50% or he has incurred loss in that year, then there is an option available wherein he can get his books of accounts audited under section 44AB and declare an income which is lower than the deeming fiction created or loss as the case may be. Carrying on business E. Carrying on business, if profits and gains from business are deemed to be profits and gains of such person under 44AD, and he claimed such income to be lower than profits and gains so deemed. So what does this 44AD says? 44AD says whenever you are carrying a business and you are supposed to declare your profits and gains as 6% or 8%. 6% in the case of digital transactions and 8% in the case of non-digital transactions. Say if your profit is less than that 6% or 8%, then you have an option to get your books of accounts audited under section 44EAB and declare an income which is lower than 6% or 8%. F. This is a new provision which is introduced. Carrying on business and is not eligible to claim presumptive taxation under section 44AD due to opting out of presumptive taxation in any one financial year of lock-in period, that is 5 consecutive years from when the presumptive tax scheme was opted. Sir, this is little confusing. So let me break it out. Say let's assume in the assessment year 1920, you have declared your income under section 44AD, right? That is 6% or 8% as the case may be. But when it comes to the assessment year 2021, say you have loss. So in that year, you want to get your books of accounts audited under section 44AB and declare an income which is lower than 6% or 8%. So you have done that in the year, in the assessment year 2021. So this particular section says from the year 2021 onwards, for the next 5 years, you are not eligible to get, you are not eligible to claim the benefit of section 44AD. That means for 2021, 21, 22, 22, 23, 23, 24, and then 24 and 25. For 2021, 21, 22, 22, 23, 23, 24, and then 24 and 25, you cannot claim the benefit of section 44AD and declare 6% or 8%. So in that case, you are required to get your books of accounts audited under section 44EAP. Let's talk about penalties for non-compliances of section 44AB. Say if a person falls under this section and fails to get audited of his accounts before the due date, then they will be liable for a penalty of 0.5% of the turnover or gross receipts up to a maximum penalty of 1,50,000. So this point says, if you are required to get your books of accounts audited under Section 44AB and file the respective forms within the due date, if you fail to do so, you will be liable for a maximum penalty of 1,50,000. However, there are certain exceptions to this. Under Section 273B, if there is a reasonable cause for delay, penalty will not be levied. Over the period, courts have decided that a resignation of tax auditor and consequent delay, death or physical inability of the partner in charge of accounts, labor problems such as strikes, lockdowns, etc., loss of accounts because of fire, theft, etc., and natural calamities have been considered as a reasonable cause. Sir, here, what if the auditor fails to get the correct information or reports any inadequate or incorrect information? In that case, even a penalty of 10,000 can be levied on the auditor also. Sir, but this is a very important provision because in many of the cases, the fees will be lower than 10,000. So now let's talk about what are all the various forms here. There are broadly three forms: Form 3CA, Form 3CB, and Form 3CD. Form 3CA is required in case of persons who carries on business or profession and who is required by or under any other law to get his accounts audited. So now let's look at this case A. For example, you are a company and you are required to get your books of accounts audited under Companies Act 2013. And in that case, you are required to file 3CA. 3CB. Form 3CB is required in case other than the cases covered by Form 3CA. Let's look at case B. For example, you are an individual and your turnover is 5 crores, which is more than 1 crore as per 44 ABA. So in this particular case, you are required to get your books of accounts audited under Section 44 AB and file Form 3CB. These two forms, as the case may be, are required to be filed along with Form 3CD, which is again a detailed form having 44 clauses analyzing and auditing the accounts of taxpayer as per Income Tax Act. So ideally, in the case of A, you are required to file 3CA along with 3CD. In the case of B, you are required to file 3CB along with 3CD. Now let's look at the forms 3CA and Forms 3CB. If you look at these forms, both forms look one and the same, except in the Form 3CA, there is a reference to that particular act under which the books of accounts are audited. It is there here. If you look at here it actually asks for that particular act under which the books of accounts are being audited. And in 3CB, if you look at 3CB, here there is a certification which says the balance sheet and profit and loss account are in agreement with the books of accounts. And there is a place wherein you can write observations or comments for balance sheet and profit and loss account. And there are also other declarations or certifications here. That is not there in 3CA. So the main difference between 3CA and 3CB is in 3CA, the reference of that particular act under which books of accounts are audited should be given. Whereas in the case of 3CB, since the books of accounts are not audited under any other act, the auditor assumes the liability of the books of accounts being true and fair or not. And here, point 3 and point 5, both are one and the same, where we are supposed to give our comments or observations, if any. This is 3CD. See, when it comes to 3CD, there are few points which are required to be noted. Fact-based reporting versus opinion-based reporting. What is a fact-based reporting and what is an opinion-based reporting? Say, for example, we are a stock auditor of a particular unit appointed by a bank. What is that we are supposed to report there? We are supposed to report what is the stock as per books, what is the stock which we could physically verify, and the differences, if any. So in that particular case, we are reporting the facts around that particular audit. Opinion-based reporting. Let's take the example of a company audit. In the case of company audit, we'll review the books of accounts, we'll finalize all that financial statements, and we are supposed to give our opinion whether it is a qualified report, unqualified report, disclaimer report, or adverse report. So this is an opinion-based reporting. Tax audit is a fact-based reporting. Second, certifying it as true and correct versus true and fair. In the case of a stock audit report, we'll be certifying it as true and correct. In the case of a company audit report, we'll be certifying it as true and fair. What does that mean? That means all the information which is given in that report is true and correct. So in that case, we'll be assuming an absolute liability. That is a point which should be kept in our mind. In the same way, our 3CD is also being certified as true and correct, not true and fair. And the another point which is to be kept in our mind is all items that are reported in the respective clauses will not be disallowed. So there will be certain clauses wherein details have to be extracted and given. Those are all for information. That doesn't mean that will be disallowed in the computation. So how can this tax audit done? This tax audit can be done by compiling the information by the management, verifying it, and then reporting in that particular clauses. So let's have an overview. If you see here that our 3CD is divided into two parts, part A and then part B. This part A, the contents of the part A are name, address, permanent PAN number, status, previous year, so on and so forth. So these are all general clauses. Part B, this part B is a specific clause by clause reporting. So the clauses 1 to 8 come under part A. So these are all general clauses, and the clauses 9 to 24 come under part B. These are all the specific requirements of the clause. Have to be reported in clauses 9 to 44. So let me once stop here. Since we have seen here, since we have seen here 3CA and 3CD, as we all know, 3CA, 3CD and 3CA or 3CD or 3CB or 3CD will be prepared as the case may be. How to file? Can we file manually? No, manually filing is not allowed. Then can we summarize all the points in a Word file or in an Excel file and then upload it? No, even that is not allowed. Then how to file? 3CA, 3CD or 3CB, 3CD can only be filed electronically. That means we have to upload a particular file into income tax portal, right? Then we cannot upload a Word file, we cannot upload an Excel file. Then what is that file? So that is the reason why there is a file extension by name .xml. Only a file extension having .xml can be uploaded. So we will see here so for creating this .xml file, there are many softwares, say Computax, Winman, Saral Income Tax, so on and so forth. By using all these softwares, XML file can be created. And our income tax department also gave us a free utility. Even with that utility, this XML file can be generated. Now I'll show you how can we download that utility from our income tax portal. The portal I'm referring to here is incometaxindia.efiling.gov.in. After going into this portal, here you could find other form preparation softwares. So click here, and then here you have form 3CA, 3CD, form 3CB, 3CD. These two are the utilities which are available in the portal. So we should download this utility, and then this utility will be downloaded in a zip file. Similarly, even this utility will be downloaded in a zip file that has to be extracted, and then our data has to be entered in that particular respective column or in that respective clause. And I am also downloading another software here, another utility here, that is DSC management utility. Why is this required? Because as you all know, business returns which are required to be audited under 44AB can be filed only with the help of a digital signature. That is, only a digitally signed XML file can be uploaded. Same is the case with our tax audit report. So in the case of this 44AB, that is 3CA, 3CD or 3CB, 3CD, only a digitally filed XML file can be uploaded. So let me open this 3CB, 3CD here. Yeah, this is how the utility looks like. On the first page, you have instructions, and in the second tab, you have form 3CB here, and in the third tab, you have form 3CD clauses 1 to 8. Fourth, you have 3CB clauses 9 to 20. Fifth, you have form 3CD clauses 21 to 24. So as we have seen, this is how 3CB looks like. Here, you should select the respective information. If the firm which is auditing the SSE is an individual, so I has to be selected or else B has to be selected. And here, the year ended 31st March or the 31st March 19 or 31st March 20. What is the year ended date of the balance sheet and profit and loss account should be selected. Profit and loss account for the period, what is the period of the profit and loss account, and the balance sheet for the year ended date should be selected. Here the name of the auditor who is signing the form and the firm of the auditor, address of the auditor. As we have discussed, any observations are to be noted here. And here these are all the true and fair certifications. And this is an important part which says any qualifications or observations so far as the form 3CD are concerned are to be given here. So this is how a form 3CB looks like. Now we'll look clauses one by one. As we have discussed, clauses 1 to 8 are general clauses. What is clause 1? Clause 1 is name of the SSE. What is the name of the SSE? Name of the SSE is the name as per records of IT department. I have a question here. Say, what if I am auditing a branch? Say, I am the auditor of SBI Eluru branch. In that case, what is the name to be mentioned here? The name to be mentioned here is the name of the SSE along with the name of the branch. So query 2, my SSE has two businesses. Say number 1 is DV Ramana and Company Chartered Accountants, and then number 2 is DVR Consultancy Services, some other firm. This is one proprietary firm and this is one proprietary firm. Say I am auditing only this proprietary firm. In this case, what is required to be mentioned is the name as per income tax department's records, and the name of the firm is also required to be mentioned. Clause 2. Clause 2 is address. Address as per records of the IT department is required to be mentioned here. Again, I have a query here. What if I am auditing a branch? In that case, address of the branch is required to be given. Sir, I have a query, sir. Say there is a name, there is a change in the name of the SSC or change in the address of a SSC. Then what is required to be given here? The updated name should be given in clause 1 and clause 2 along with the fact that there is a change in the name in the previous year is also required to be mentioned. Clause number 3. Clause number 3 is permanent account number. Permanent account number is the PAN number as per the records of IT department. So these three things can be verified from income tax department's portal. If you log into the income tax department's portal using the PAN number of the SSE, there will be a tab by name profile. In that particular tab, all these details will be displayed. So these details can be verified from the income tax department's portal. Clause 4. Clause 4 says whether the SSE is liable to pay indirect tax like excise duty, service tax, sales tax, customs duty, etc. If yes, please furnish the registration number or any other identification number allotted for the same. So for this, the information is to be obtained from the SSE. So first, obtain from the SSE what all registrations SSE has got registered. So jot down all those registrations in this particular clause. So I have a query again here. Say, what if you are auditing an SSE who is having turnover more than 40 lakhs? So he is supposed to get registered under GST, but he did not get registered under GST. So what is required to be done? In that case, the same fact has to be mentioned under clause 4. Right. Clause 5, status. Here the status is defined in section 231. That is whether he is an individual, HUF, partnership firm, company, LLP, etc. Again, another query here. What if the status of SSE has been changed during the year? Example, if the SSE was a company in the earlier year and then that company got converted into an LLP during this year. So what should be mentioned here? The same fact along with the changed name is to be mentioned in clause number 5. What is the previous year? The previous year we are looking for is 1st April 2019 to 31st March 2020. Assessment year. Assessment year is 2021. Indicate the relevant clause of section 44AB under which the audit has been conducted. As we have seen in that applicability of 44AB, there are basically 5 clauses. First clause, if the sales or turnover is more than 1 crore, then it is clause A. If he is a person carrying on profession and his gross receipt is more than 50 lakh, then it is clause 2. Clause 3, as we have seen, there is a deeming fiction created for certain businesses. Say, SSE is carrying on the business of hiring, leasing or plying of goods carriages. In that particular clause, the SSE is required to declare 7,500 per month or 1,000 per ton of vehicle as the case may be. Say if his income is, if his profit is less than the deemed gains or profit, then in that case he will be getting his books of accounts audited. In that case, clause C has to be mentioned. Clause D, say a person is carrying on profession and the deeming fiction created under 44 ADA is 50% of the turnover is his profits and gains. Say if his profits and gains is less than 50% of his turnover, then he will be getting his books of accounts audited under 44 AB. Then in that case, clause D has to be mentioned. Clause E. As we have seen, clause E is applicable in 2 cases here. Say there is a deeming fiction created under 44 AD, wherein 6% in the case of digital transactions or 8% in the case of any other transactions will be the profits and gains from business or profession in the case of other businesses. So if the profits and gains from business or profession is less than 6% or 8%, then clause E should be mentioned. And there is also another deeming fiction created which says if an SSE opts out of 44AD, as we have seen in the earlier example, since he has opted out of 44AD in the year 2021, he cannot claim the benefit of 44AD for the next 4 years. So for the next 4 years also, he'll be getting his books of accounts audited under 44AB. Even in that case, clause E has to be mentioned. Now we'll just have a look at the utility. See, this is how the utility looks. Clause number 1, name of the SSE. Say the name of the SSE is Ramana Chaitanya and the name of his firm is ABC and Co. So these details are required to be entered in clause 1. Clause 2, address of the SSE. Say address of the SSE is RRPet, Eluru, pin code, and then the name of the state. Permanent number. Permanent number is the PAN number which can be obtained from income tax portal. And whether the SSE is liable to get registered under Indirect Tax Act, like excise duty, service tax, sales tax, etc. If yes, yes. If no, no can be selected here. If it is yes, the respective law is required to be selected. Say I have selected goods and service tax. If it is goods and service tax, then the respective state is also required to be selected. I have selected Andhra Pradesh in this case, and I have given a random GST registration number here. And status. Status, you can select your status from the drop down list provided. In this particular case, since it is a PAN of a particular firm, I have selected firm here. Previous year. Previous year is from 1st April 2019 to 31st March 2020. Assessment year is 2021. And a relevant clause of 44AB under which the audit was conducted. So in this case, I have selected 44AB because this is the case of an audit firm, and in the case of an audit firm, it is carrying on profession. So if it is carrying on profession, then the gross receipts of the profession, if they are exceeding 50 lakhs, then they're supposed to get their books of accounts audited under 44AB. Clause 9. Right. What does this clause 9 says? If firm or association of persons indicate name or member and indicate name of partner or member and their profit sharing ratio. If there is any change in the partner or member or in their profit sharing ratio since the last date of the preceding year, the particulars of such change should be given here. So here the names of the partners of the firm or members of an association or body of individuals and their profit sharing ratios needs to be given, and the same should be verified from the agreement or any other document evidencing partnership. Say in the case of a GST registered person, if we log into our GST portal, there we have all these details. So even from those details, the profit sharing ratio and the partners details can be verified. If there is any change in the partners or members or their profit sharing ratio from the last year of the preceding year, obtain certificate of registration or agreement. Say if there is any change in the partnership, then the revised partnership agreement should be obtained. Acknowledgement of filing with registrar or firms, etc. can also be verified to ensure the correctness of the change. Say in the case of a partnership firm registered, so the change in the partnership will also be registered with the registrar of firms. In this case, those details can be obtained and verified with those details. What if there is no change in the members, but there is change in the profit sharing ratio. Say members are one and the same. There is no change in the members, but the profit sharing ratio between those members got changed. So the same thing has to be reported. We will see in the utility how this has to be reported. Say if firm or association of persons indicate name of partners or members in their profit sharing ratio. Right. Say here I have taken an example where there are two partners. It is D. Ramana Chaitanya and then D. V. Subbarao. Say their sharing ratios are 50 and 50, half and half. These details are required to be given here. Right. And then coming to this clause 9b, if there is a change in partners or members or in their profit sharing ratio since the last date of the preceding year, the particulars of such change are required to be given here. Say I have taken a case wherein there is a change. What is that change? Say last year, the sharing ratio of D.V. Subbarao is 60 and the sharing ratio of Dr. Chaitanya is only 40. But during this year, what happened? The share of D.V. Subbarao got reduced from 60 to 50. And then the share of Dr. Chaitanya got increased from 40 to 50. These details are required to be entered here in the same way we have entered. 10. Nature of business or profession. If more than one business or profession is carried on during the previous year, nature of every business or profession. If there is any major change, if there is any change in the nature of business or profession, the particulars of such change are also required to be given here. So what is the requirement of this clause? This clause is asking us to mention what is the nature of business or profession. If there are more than one businesses, then the nature of business or profession of more than one business. If there is any change in the nature of business or profession, that change is also required to be mentioned. So let us see in the utility how it looks like. See, this is 10A, clause 10A. Here, say, in this particular example which I have taken, say there are two lines of activities. And number one is tax consultancy and number two is accounting, bookkeeping and auditing. So I have mentioned those two nature of businesses here. If there is any change in the nature of business or profession, then the particulars of such change. Say I have taken there is a change in the nature of business or profession. Say let's assume in the last year, this particular firm is carrying on only tax consultancy services. Only during this year, the accounting, bookkeeping and auditing services are included. Then in that case, the services which are included in the current year are required to be mentioned here. Clause 11. Whether books of accounts are prescribed under section 44AA. If yes, list of accounts so prescribed. Books of accounts have been prescribed only for professions. So only in the case of professionals, books prescribed under 44AA read with 6F to be mentioned. What are all the books of accounts prescribed? They are like this: cash book, journal book, ledger book, and the copies of bills. Sir, apart from these cases, in the other cases, there are no books of accounts prescribed. Right? Clause B. Books of accounts maintained. So this clause requires us to mention that what are all the books of accounts maintained. So in this case, obtain from the SSE a complete list of books of accounts maintained by him, either computerized or otherwise, that is manual. Then C, list of books of accounts examined. In the case of books of accounts, in the case of this particular clause C, what are all the books of accounts examined are required to be given here. Right. We have a question here. In the case of books of accounts which are maintained in computer system, what is the address, because in this particular case we are supposed to mention the address where the books of accounts are maintained. Say if the books of accounts are maintained in a computerized environment, say in an environment like SAP, what is the address where the books of accounts are maintained? Here there is a clarification which says that where such computer system is maintained will be the address where the books of accounts are maintained. Right. We will see in the form what is the information required. See here, since I have taken the case of a professional, that is a chartered accountant, books of accounts are prescribed under section 44AA. See, books of accounts are prescribed under section 44AA only for professionals, that is for accountants, lawyers, architects, doctors, etc. So these are all the list of books of accounts prescribed, and the list of books of accounts maintained. These are all the list of books of accounts maintained. Where all these books of accounts maintained? They are maintained in this particular address, in this particular state, and in this particular PIN number. This particular clause asks for what are all the books of accounts examined. In case if we have examined all these books of accounts, then all these books of accounts are required to be mentioned here. Clause 12. Whether the profit and loss account include any profits and gains assessable on presumptive basis. Say, continuing our example, say we have two lines of businesses. Number one is chartered accountancy services, and number two is tax consultancy services. Say, I am maintaining my books of accounts only for chartered accountancy services. I am not maintaining my books of accounts for consultancy services. And for consultancy services, I am opting section 44 AD, wherein I will be declaring 6% or 8% as the case may be, 6% for digital transactions and 8% for any other non-digital transactions. So in this case, I am supposed to mention what all the businesses where I am opting for presumptive taxation sections. So here I am supposed to mention that in the case of tax consultancy services, I am opting for section 44 EB. We will see in the form also. See here. Say, as I have told you, I am right here. It is not 44 ADA. Since it is profession, it is 44 ADA. So I will be opting my presumptive taxation under section 44 ADA since it is a profession. So say my gross receipts are 2 lakh rupees. I am supposed to declare my profits and gains from business or profession at the rate of 50% of the gross receipts. So I will be declaring 1 lakh as my profits and gains from business or profession, and I will be reducing this from my computation. Clause 13. This clause 13 asks for the method of accounting employed in the previous year. There are two methods of accounting which are generally followed, that is cash or mercantile. Whether there had been any change in the method of accounting employed vis-a-vis the method in the immediately preceding previous year. If there is any change in the method of accounting employed, say in the previous year I have been following cash based accounting, and in the current year I have changed from cash to mercantile or from mercantile to cash, the same has to be mentioned here. And if there is any impact on the profit or loss because of the change in the method of accounting, that has to be given in clause C, that has to be mentioned in clause C. And as we all know, all companies are mandatorily required to follow mercantile basis of accounting. Only in the case of LLPs or sole proprietorship concerns, partnership concerns, societies, etc., they have an option to choose either cash or mercantile basis of accounting. Right. Here D asks about ICDS. What is this ICDS? ICDS are notified with effect from 1st April 2015. They are like this. ICDS 1 talks about accounting policies, 2 talks about valuation of inventories, 3 talks about construction contracts, 4 talks about revenue recognition, 5 talks about tangible fixed assets, 6 talks about effects of changes in foreign currency rates, 7 talks about government grants, 8 talks about securities, 9 talks about borrowing cost, 10 talks about provisions, contingent liabilities, and contingent assets. Students, if you see, these ICDS are directly correlatable to our accounting standards. AS1 is directly correlatable to 1, ICDS 1, AS2, AS7, AS3, AS9, ICDS 4, AS10, ICDS 5, AS11, ICDS 6, AS12, ICDS 7, AS13, ICDS 8, AS16, ICDS 9, AS29, ICDS 10. Then why is there a requirement to introduce income computation and disclosure standards? The reason being, as we all know, now there will be 3 set of books of accounts. What I mean by 3 set of books of accounts? Say there will be companies which are listed or wherein their net worth is extremely high. They are mandated to follow Ind AS accounting standards, and there will be other companies who will be following accounting standards, and there will be other set of businesses like individuals, partnership firms, and HUFs who will not be following any accounting standards because they are not required to follow any of the accounting standards. So there will be 3 types of profit for comparable businesses. Say if a company which is listed is doing trading in a particular goods, and if a company which is small is doing trading in a particular goods, and if there is any partnership firm or individual who is also doing trading in a particular goods, so for these 3 entities, the profit that is computed as per the relevant accounting standards for each of them will not be one and the same. There will be change in the profit. And what is that we follow for calculating the taxable income? We will take what is the profit as per our P&L account, and then we will add what are all the additions that are required to be done, and we will reduce what are all the deletions that are required to be reduced, and the difference and the profit as per P&L account, add additions less deletions will be our taxable income. When the profit as per P&L account is changing because of the applicability of Ind AS or accounting standards or no standards, in that case, this profit is not consistent. So there will be a change in the taxable income also. That is the reason why ICDS are introduced. And this clause E says, if yes, give clause D, whether any adjustment is required to be made to profits or loss for complying with ICDS notified under section 145(2). Clause E says, if S, give details, and then clause F asks for disclosure as per ICDS. So first let us look at ICDS. Income computation and disclosure standards have been notified under section 145(2) of Income Tax Act 1961 by notification number 3079 dated 29 September 2016. Okay. We have also seen the reason why ICDS are introduced. And ICDS is not applicable to a person who is following cash system of accounting. What does that mean? Only SSEs who are following mercantile system of accounting, only for them ICDS is applicable. Right. And then if there is any adjustment to be made to the profit as per ICDS, then ICDS require ICDS wise reporting for the adjustments made in profit or loss for ICDS complaints, showing clearly increase or decrease in the profit as well as the overall net effect to such adjustments. And as per clause F, ICDS require reporting of ICDS wise disclosures. And as we have seen, there are 10 ICDS standards, and out of these 10 ICDS standards, there are 8 ICDS standards which require disclosure. And for those standards which are not applicable, we can mention it as not applicable. We will see that in the utility now. A method of accounting employed in the previous year, it is mercantile system. Whether there is any change, no, there is no change. If there is any change, what is the impact of that change on the profit and loss account should be given here. If that change results in increase, so that should be given here. If that change results in decrease, that should be given here. Whether any adjustment is required to be made to the profit or loss for complying with the provisions of ICDS. I've said no. Say if there is any change, then these details, this tab will be enabled or this table will be enabled. So in that case, let's see if there is any change, say because of this, there is an increase in the profit. So that details are required to be given here. And disclosures, as we have seen, out of 10, 8 clauses require disclosures. What are all those 8? 1, 2, 3, 4, 5, 7, 9, and 10. Say, for example, I am talking about an entity which is not into construction contracts. So this particular clause becomes not applicable. This particular ICDS disclosure becomes not applicable. And my SEC has no government grants. So even this becomes not applicable. My SEC has no borrowings. In that case, even this becomes not applicable. My SEC has no provisions, no contingent liabilities, and no contingent assets. Even that, in that case, this also becomes not applicable. If there are any fixed assets, then this particular clause, requires disclosure. And as you know, there will be revenue for every business. This particular clause, ICDS disclosure, is required, and accounting policies. What I have done here, see, while we are preparing financial statements, we will have a set of accounting policies which are already, decided, and based on that only we will prepare financial statements. So I have referred that particular note here. And for revenue recognition also, we will have a accounting policy based on which revenue will be recognized. I have referred that particular note here. In the case of tangible fixed assets, what I have done is there is a clause number 18, which has a detailed presentation of fixed assets. So I have referred that particular clause here. Clause number 14. Method of valuation of closing stock employed in the previous year. In the case of deviation from the method of valuation prescribed under section 145A and the effect thereof on profit or loss, closing stock should be valued at lower of actual cost or net realizable value, where costs are ascertained on a basis of specific identification method. FIFO or weighted average cost method can be followed. This particular point says closing stock has to be valued either lower of actual cost or net realizable value method. Where costs are ascertained on a specific identification method, FIFO or weighted average can be followed. If the method which is followed by the entity is inappropriate, then the same can be mentioned here. What is this 145A? Before knowing or this 145A, we have to know what is this inclusive system of accounting versus exclusive system of accounting. Inclusive system of accounting means your sale, your purchases, your sales, your opening stock, and your closing stock. All these 4 items will be accounted inclusive of the indirect taxes. Exclusive method of accounting is the accounting which we generally follow, wherein we will not include the value of indirect taxes in the opening stock, sales, purchases, or closing stock. That will be calculated separately and that will be a balance sheet item. AS2, which is required to be followed by companies, says that exclusive method of accounting should be followed, whereas 145A requires inclusive system to be followed. So if there is any difference in the profit because of non-following of inclusive method of accounting, then the same should be given in this particular clause. However, ICAI tax audit guidance note says that there will be no impact on the profit of the entity because of non-following of inclusive method of accounting. We will see the clause now. See, this is how the clause looks. Since I am talking about a chartered accountancy firm or a professional firm, I have considered it as not applicable here. If it is a trading concern, then the value of method of accounting of the closing stock has to be mentioned here. As we have discussed, if we are not following inclusive method of accounting, then this will be yes. In that case, we are supposed to report what is the increase in the profit or what is the decrease in the profit because of non-following of inclusive method of accounting. Look at clause 15. This clause 15 says particulars of capital assets converted into stock in trade are required to be given here. So first, let's analyze if a capital asset is sold, then a capital gain arises because then there will be transfer of a capital asset. In this case, what will happen is when a capital asset, although it is not sold and although actual transfer did not happen, even in that case, because of conversion of capital asset into stock in trade, capital gain arises in the year of conversion. And the capital gain will not be postponed till the year of sale. Let us take an example here. SSE is in the business of trading in shares. Holds some of his stock as investment, that is capital asset. On a later day, converts capital asset into stock in trade. Although there is no transfer of capital asset on the day of conversion of capital asset into stock in trade, it is deemed as transfer of capital asset and attracts capital gain provisions. Let us look at the clause now. This is how the clause looks. Give the following particulars of capital asset converted into stock in trade. If a capital asset is converted into stock in trade, then these details are required to be given in this particular clause, which is the description of the capital asset, date of acquisition, cost of acquisition, amount at which asset is converted into stock in trade. Clause 60. Amounts not credited to profit and loss account, being items falling within the scope of 28, pro forma credits, duty drawbacks, etc., escalation claims accepted during the year, any other item of income, capital receipt, etc. Amounts not credited to profit and loss account but nevertheless credited to general reserve are to be reported as information is required to be given with reference to entries in the books of accounts produced before the tax audit. Capital receipt would normally would not normally attract tax unless the transaction is specifically covered under the provisions. Thus, if such receipt is not appearing in the profit and loss account, it will be covered here. Let us understand this with the help of examples. Say I have a capital subsidy received in the form of a government grant. Say I have set up my business in a remote or in a backward place. So government has given me a government grant in the nature of capital subsidy. What is that we generally do? We'll generally credit it to our reserve. But as per this particular clause, that information is required to be reported here. Number two, I have purchased a particular fixed asset from which I am manufacturing a particular product. So as per our Make in India scheme, say I am eligible for a grant for purchase of that particular fixed asset. So government has given me a grant. What is that we generally do? We will take it to the reserve, or then we'll adjust to the value of the fixed asset. Even though we have accounted it in that way, those details are required to be given in this particular cost. Compensation for surrender of rights. Say I have rights to manufacture a particular product and I have surrendered those rights. I've got monies. What is that we generally do? We will credit the monies received to that particular rights which are shown in our balance sheet asset side. Although that is correct as per our accounting standards, but the amount received is required to be given in this particular clause. And last thing we all can directly correlate is the profit or loss and sale of fixed assets or investments. Say we have sold a particular fixed asset. What is that we generally do? We'll calculate what is the written down value and then what is the value for which it is being shown, and then we will calculate the difference between the written down value and the amount of consideration received. If the amount of consideration received is more than the written down value, then only to the extent by which the consideration is greater than the written down value will be credited to the profit and loss account. If the consideration received is less than, then the difference will be debited to the profit and loss account. That is how we generally do. But in this clause, we are supposed to mention the total consideration received against the sale of fixed asset or investment. We will see the clause now. Yeah, this is how the clause looks. In this particular 16A, as we have discussed, which are falling under this section 28 are supposed to be mentioned. Pro forma credits or duty drawbacks, etc. are supposed to be mentioned here. Escalation claims, any other income or capital receipt, etc. should be mentioned here. Clause 17. Where any land or building or both is transferred during the previous year for a consideration less than the value adopted or assessed or assessable by any authority. Sir, what does this whole description mean, sir? If we put in a layman's language, we have two types of values for any capital asset being land or building. One we call it as market value, and the second we call it as government value. What is this government value? Government has fixed a particular value for every land and building, and it says that whenever a land or building is transferred, the stamp duty which is required to be paid will be paid as a percentage of the amount fixed by the government. If the consideration is less than that, and if the consideration is more than the value which is fixed by the government, then the stamp duty will be a percentage of the actual consideration. In the similar way, here we are supposed to mention the details of land or building transferred where the consideration is less than the value which is adopted by government for calculating the stamp duty. Let us take two examples here. Example 1, if the asset is a business asset, and then what will happen? Then the difference between the value adopted for payment of stamp duty minus the value of actual consideration will be taxable as or will be taxed as business income. If it is a capital asset, then the value adopted for stamp duty minus the actual consideration will be assessed as capital gain. So the value, the difference of the value should be given here. We will look at the clause once. See here, let us assume a case wherein a land or building is transferred. Let's take a land is transferred, and the address of that particular land is situated in Yellow, and the consideration received or accrued is 8 lakhs, whereas the value adopted for stamp duty is 10 lakhs. So here 10 lakhs is required to be mentioned. In this way, the details are required to be given for this particular clause. Clause 18. We all know there is one particular clause in our financial statements of companies which is displayed in a horizontal way. That is our fixed assets clause. This particular clause 18 is almost identical to our fixed note on fixed assets. What is the information that is required to be given here? The information required is description of asset or block of assets. See, in Income Tax Act, we have a concept of block of assets. Say there are 2-3 types of assets which are fitting into one particular block. Then all those assets are required to be shown in that particular block of asset. So here the description of the asset or the description of block of assets is required to be given. At the rate of depreciation for this particular block, say we are talking about plant and machinery, the rate of depreciation of plant and machinery is 15%. That is required to be given. Actual cost or written down value, as the case may be, additions, deletions, depreciation allowed, and the written down value at the end of the year is required to be given here. We will see in detail in the clause. Before that, there are two important points which are required to be noted here. See, point 1 says assets acquired, aggregate payment made to a single person in a single day other than by way of account pay, check or bank draft exceeds rupees 10,000. Say what if I have purchased a computer, say worth 50,000, for which I have paid in cash. In that particular case, for this particular asset, depreciation will not be allowed. So you are not supposed to claim depreciation for this asset. And point number 2, say assets added or deleted during the year are supposed to be segregated with the criteria of assets put to use for less than 180 days and assets put to use for more than 180 days. Why is it required to be done? Because in case if an asset which is added is put to use for less than 180 days, then only 50% of the depreciation will be allowed in that year. In case if the asset is put to use for more than 180 days, then the total depreciation will be allowed. So let us look at the clause once. This is how the clause looks. As I have explained, I have taken the case of plant and machinery. The depreciation rate is 15%. Say let's take the opening WDV is 1 lakh. I have purchased 2 assets in this year. Say asset 1 Asset 1 is purchased on 1st April 2019 and it is put to use also on 1st April 2019. And second asset I have purchased on 31st March 2020 and it is also put to use on 31st March 2020. So these two are the assets which are purchased during the year. If you look at this particular depreciation, here I have claimed depreciation for this second asset, which is put to use for less than 180 days at 50% of the actual rate only. That is one point which is required to be noted here. Apart from this, all other categories of assets, say apart from plant and machinery, computers, windmills, etc., as the case may be, are required to be mentioned here. Amounts admissible under section 33AB, 33ABA, AC, so on and so forth. We will understand each and every section here. What is 33AB? 33AB talks about SSEs in the business of tea, coffee, or rubber, and they are contributing to the development account. 33ABA talks about site restoration fund. 33ACA talks about investment allowance. 35 talks about scientific research expenditure. 35ABB talks about expenditure for obtaining telecom license, so on and so forth. But students, don't worry, majority of these sections are not applicable for SSEs carrying on business in our place, apart from this particular 35D, right? Nevertheless, these are certain specific provisions which are applicable to SSEs carrying on specific type of businesses. Let's see 1-2 provisions here. 33AB. This 33AB talks about SSE in the business of plantation of tea or coffee or rubber. And there are certain provisions. Certain provisions are like this. He is required to contribute to development account with NABARD. Out of the amount which is contributed to the development account with NABARD, 40% will be allowed as deduction. You are not required to remember all these provisions. Just for your understanding, I'm just trying to explain one particular section 33AB. And as we all know, this 35D talks about amortization of preliminary expenditure. What is preliminary expenditure? The expenditure which is incurred before incorporation is preliminary expenditure. Say, we are incorporating a company. The expenditure or the cost for incorporating the company and the expenditure incurred for obtaining the respective licenses before incorporation, all that expenditure will be classified as preliminary expenses. In the case of preliminary expenses, only 1/5 of the preliminary expenditure will be allowed as deduction in the first year, and out of that 4/5 which is not allowed, 1/5 will be allowed for the next 4 years. So as we have seen two clauses here, we will just look at our utility and then we'll understand what is the information that is required to be given. Yeah, as we have seen, what is the information that is required to be given here is, say, first select the respective section from the top drop down, and in this case, say we have incorporated a company wherein the preliminary expenditure for incorporation and obtaining all other licenses is 5 lakh rupees. That 5 lakh is debited to P&L account in the first year itself. But out of that 5 lakh, what is eligible as deduction in the first year? It is only 1 lakh. Only 1/5 will be allowed as deduction in the first year. And as I have told you, in the case of 33AB also, Out of the amount, whatever is contributed to the development account with NABARD, 40% of the contribution will be allowed. So let us take 33 AB. See, I have contributed 1 lakh to the development account with NABARD. So out of that, only 40,000 will be allowed as deduction in that particular year. Right. So in this clause, what is that we are supposed to disclose is what is the amount that is debited to profit and loss account, and out of that, what is the amount that will be allowed as deduction in that particular year. Right. Now we'll talk about clause 20. Clause 20 says any sum paid to employer as bonus or commission for service rendered where such sum was otherwise payable to him as bonus or dividend. Any sum received from employees towards contribution to any provident fund or superannuation fund or any other fund mentioned in section 224(10) and due date for the payment and the actual date of payment to the concerned authorities under 36(1)(5)(a). Okay. See, let's first understand this A. Bonus and commission to employees as per their employment term is generally eligible as expenditure if it is there in the contract. But there are a few cases where dividend or profit is indirectly distributed in the way of bonus or commission to avoid dividend distribution tax and to reduce the income tax. So if this is the case, then the details are required to be mentioned in this particular point. And this clause B says every business, who is supposed to contribute to provident fund or employee state insurance fund, they'll be deducting a certain percentage from the amount paid to employees as employees' contribution. So when that employee's contribution is deducted, that has to be paid to that respective fund. So deduction will be allowed only when the sum which is deducted from the employee has been paid to that respective fund. Let us look at the clause and then we'll understand this in detail. So this, as we have seen, if there is any indirect distribution of profits or gains to employees as bonus or commission, that has to be given here. And this particular clause B, which talks about funds, I have taken a case wherein I have deducted provident fund from one of my employee, and the sum deducted is 1,000 rupees. What is the due date for payment? The due date for payment is 15th April 2020 for the month of March 2020. Ignoring the relaxation which is given by the government because of this COVID pandemic situation. And what is the amount that is actually paid? Actually paid is also 1,000. When is it paid? It is paid on 15/4/2020 on the due date itself. If this is not paid, then this information is to be deleted and 0 needs to be mentioned here. Say if it is paid beyond the due date, then the actual date of payment is required to be mentioned here. Right. Clause 21. As we are going forward, we are moving to the most important clauses. One of such most important clauses is this clause 21. This clause 21 talks about amounts debited to profit and loss account, expenditure of capital nature, personal nature, advertisement expenditure by a political party, expenditure at clubs, expenditure as cost of facility used in clubs, expenditure by way of penalty or fine, etc. See here, the respective details are, the respective details are required to be entered in the respective clauses. We'll understand each and every clause and how the details are to be entered in our utility. See, here the first point talks about capital expenditure. If there is any capital expenditure, then that capital expenditure is required to be mentioned here. Personal expenditure, say, the firm has a car which is solely used by one of the partner, and which is not used by the firm for its day-to-day business activities, and the car maintenance is say 2,000 rupees, which is debited to the profit and loss account. So those details are required to be given here. And this particular table asks for advertisement expenditure incurred by any political party. Advertisement expenditure by way of giving an advertisement in any brochure or pamphlet which is published by a political party. Those details are required to be given here. And here, expenditure incurred at clubs being entrance fee. Say in Elur, we have a club by name Eluru Town Hall. If I am a member of that particular club, so I will be required to pay entrance fee on an yearly basis or a subscription fee. Say let's take that as 1,500 per year. If this particular expenditure is debited to the profit and loss account, then it is required to be mentioned here. Same way, there will be a couple of facilities like gym, tennis court, so on and so forth. So if any expenditure is incurred for such facilities, that is required to be given. Expenditure by way of penalty or fine for violation of any law for the time being in force. Say I am a person who is registered under GST, and I'm supposed to file my GST returns by 20th of the next month. Say there is a delay in filing of GST return and I have paid late fee. If that late fee is also debited to the profit and loss account, that should be mentioned here. Expenditure by way of any penalty of fine not covered above. If there is any other penalty of fine, that should be given here. And expenditure incurred for the purpose which is an offense or which is prohibited by law. If such expenditure is debited, that should be given here. We'll look at clause B. Amounts inadmissible under section 40A. Sir, now let's see what are all the amounts that are inadmissible. Under 40A1, payments to non-residents where TDS is not deducted or not paid. 40A1A, payments to residents where TDS is not deducted or paid. 40A1B, payments to non-residents where the payment is subjected to equalization levy which is non-deducted or not paid. 40A IC, fringe benefit tax. 40A1C. 40A2A, wealth tax. 40A2B, royalty, license fee, service fee, privilege fee, or any other fee which is levied on state government and undertaking by state government. 40A3, payments toward salaries where TDS is not deducted. 40A4, payments toward provident fund or other fund established for the benefit of employees where TDS is not deducted or not paid on salaries. So what is this? Say if TDS is not deducted on salaries, then even the payments to provident fund or any other fund are required to be given here. And tax paid by employee for perquisites under 40A5. We'll see one by one in our utility. First, as payments to non-residents. Say in this case there are no payments to non-residents. Because payments, the details which are required to be given in this payments to non-residents and this payments to residents is one and the same. So I'll explain this here in payments to residents. Payments to residents. Okay. See, I have two business premises. One business premise is in Elore and the second business premise is in Vijayawada. Say I have not deducted, say I am paying 1 lakh as rent, say for the whole year, and I've paid it on 31st March 2020. I have not deducted TDS for my Eluru premises. That is, and I've paid the total 1 lakh sum to the owner of the premise. In that case, I'm supposed to give those details here. This talks about transactions where TDS is required to be deducted but not deducted. Second, say I have a premises in Vijayawada. I have paid 1 lakh and have deducted 10,000, but I have not paid the same sum to the government account. So I have deducted, but I did not pay the same thing to the government account. So in that case, details are required to be given in this particular table. In 3, if there are any payments to non-residents and there are certain payments which are subjected to equalization levy. If that equalization levy is not deducted, or if that in that case details are required to be given in these two tables. If there are any fringe benefit taxes, then those details, wealth taxes, those details, royalty, license fee, service fee, which are paid by state government undertakings to the state government or central government, are required to be given here. Sir, as we have seen, this is salary payments. So this particular table and this particular table are one and the same. Just that key here, instead of rent, salary will come. So when we are paying salary, even salary is subjected to TDS. If TDS on salary is not deducted, or in case where TDS on salary is deducted and it is not paid, that information is required to be given here. If there is any amount of salary on which TDS is not deducted, then the respective details of contribution to PF or other fund are also required to be given here. Sir, here it is the contribution of employer, because employee contribution we have already seen in the earlier classes. And if there are any perquisite taxes which are paid by employer, that details are required to be given here. If we look at class C, this talks about interest, salary, bonus, commission or remuneration inadmissible under section 40B, 40BA and computed thereof. Salary, bonus or commission or remuneration or interest are admissible unless are not admissible unless the following conditions are satisfied. It is like this: remuneration is to be paid to working partners only. Remuneration or interest is authorized by partnership deed. Remuneration does not exceed the limit prescribed under section 40AB. Interest does not exceed the simple interest calculated at the rate of 12%. If these conditions are not satisfied, then details are required to be given in this particular table. D. This is very important table. As GSR Garu already covered in his opening remarks, this table talks about cash payments. Let us see. This table talks about disallowance for cash payments. A point to be noted is cash expenditure limit per person has been decreased from assessment year 1890, has been decreased from 20,000 to 10,000 from assessment year 1890. Firstly, we'll see what does this particular section 40A3 This particular section 40A3 talks about cash payments made on a single day to a single person in excess of amounts of 10,000. So if there are any payments which are beyond 10,000 to a single person in a single day, those details are required to be given here. We all have a question here. Sir, this particular clause always says about other than by way of account pay check or account pay draft. What about electronic transfers? We have UPIs now, we have NEFT RTGS transfers. NEFT RTGS transfers, UPI transfers are all allowed as per this particular section. And there are also some exemptions which are given in Rule DD, which says if on that particular day there are no banking facilities available, then cash payments are allowed. If the cash payments are to a farmer, then even in that case, cash payments can be all. And there are also certain exceptions, certain other exceptions which are given in this particular rule DD. We will look into the utility. So here, how can this information be extracted first? See, SSEs, they might be maintaining their books of accounts either manually or electronically. Whatever be the case, once we review the particular balance sheet, there will be a head by name cash and bank balances. In that, if we go into the head cash account, there if we can verify whether there are any credits in the cash account beyond the limit of 10,000, so those details are required to be entered here. Nevertheless, there will be few entries which are beyond 10,000. Like, say, if there is a bulk entry, say I have 5 employees and I am paying salary of 10,000 to every employee. So 50,000 is the expenditure. Say I have made a bulk entry of 50,000 for all these 5 payments. So there can be some payments of this sort. And second, there will be some contra entries. See, I have deposited cash into my bank account. So there can be some contra entries like this also. So when we are reviewing the particular cash account, we have to verify whether there are any credits in the cash account which are beyond the specified limit of 10,000. If there are any entries, then check with the SSE or the accountants, as the case may be, what is the nature of this particular payment. And if that nature falls within the section of 40A3, then those details are required to be given in this particular point, in this particular table. So yeah, now we'll look into the utility. Here there are 2 tables in this particular subclass again. First table talks about the payments which are being made in the previous year. Say I have paid salary of 20,000 to an employee by name Chaitanya, then I'm supposed to give those details here. And the second table talks about, say, if I'm following mercantile basis of accounting and I have created liability for the payment of this salary as on last year, that is as on 31st March 2019, I have created a liability for payment of salary to one of my employee by name Chaitanya for an amount of 20,000. But I have paid that amount in the current year, that is in the financial year 1920 via cash on 31st March 2020. Even those details are required to be given here. E. Provision for payment of gratuity not allowable under section 48(7). As our chairman JSR Garu covered this in the opening remarks, any employee statutory payments provision will be allowed only when it is paid. So, provision made for gratuity but not paid should be mentioned in this particular point. 40A9. Expenditure incurred on setting up a formation of or as contribution to any fund, trust, company, association, or body of individuals, etc. Let us understand this 40A9. Say I am setting up a provident fund trust. So for the process of setting up of this provident fund trust, if there is any expenditure incurred, then that expenditure is required to be mentioned in this particular point. We will see these two, E and F, in the utility. Say I have a gratuity payment liability of 2000 which is not paid. That has to be mentioned here. And as I've told you, I have incurred 1000 rupees for setting up of a provident fund trust account. So that details are required to be mentioned here. Particulars of any liability of contingent nature. If there is any liability which is in the nature of contingency, that has to be mentioned here. Amount of deduction inadmissible in terms of 14A in respect of expenditure incurred in relation to income which doesn't form part of total income. Interest and amount inadmissible under provision to section 3613, which is interest paid in respect of amounts borrowed for the purpose of business, is not allowed till the date asset is put to use. We will understand these three clauses now. Say there is a liability which is contingent in nature, which may or may not occur. In that case, those details are required to be given here. Under 14A, say here, this is a laid down principle of Income Tax Act. If there is any expenditure incurred and the gains for the expenditure which are incurred are exempt, then that expenditure also will not be allowed. Let us understand this with the help of an example. Say I have purchased shares and I'm holding them for a longer period, for more than a year, wherein it will be classified as long-term holding. So when I'm selling those particular shares, my gain will not be subjected to tax till the assessment year 2021. Anyways, after this assessment year, long-term gain on transfer of long-term capital gain is also subjected to tax. But let's assume a case wherein gain on transfer of shares, long-term capital gain on transfer of shares is not subjected to tax. And we also know when there is any sale which happened, there will be STT, securities transaction tax, and there will be commission paid. So when this particular gain is not taxed, this expenditure also will not be allowed. So in case if there is any expenditure of this sort, that has to be given in this particular table. Amounts inadmissible under provision 23613. Say I have purchased an asset through funds borrowed. The interest expenditure for the funds borrowed will not be allowed till the date the asset is put to use. So till the date the asset is put to use, the proportionate amount of interest paid will not be allowed. So if there is any interest expenditure of this sort, that has to be given in this particular point. Clause 22. Sir Kishore Garu?
Yes, sir. Please tell.
Sir, is everything all right, sir? My screen, my voice, is everything all right, sir?
Yes, sir. Yes, sir. Everything is fine. You can continue.
Sure, sure, sir. Clause 22. Clause 22 talks about, before talking about this clause 22, let us, understand the concept of MSMED Act. Micro, Small and Medium Enterprises Act 2006, specifies that if there is any purchase transaction, if there are any goods purchased from SSEs, from persons registered under MSMED Act, then payment for those purchases has to be made within a period of 45 days from the receipt of goods. Although we might be having various other credit terms like 90 days or 180 days, as the case may be, even in that particular case, payments are required to be done within 45 days from the receipt of goods or services from MSME suppliers. If there is any delay in the payment to MSME suppliers, interest is also stipulated. So, in a case where there is a delay in payment to MSME suppliers and interest is paid, that interest is required to be mentioned in this particular table. In this particular table, say I have taken a case wherein I have bought, a computer peripheral from an MSME supplier, and I have not paid the amounts to him within that 45 days period, and I have paid 1,000 rupees of interest. So that details are required to be entered in this particular point. 23. Particulars of payments made to persons specified under 40A2B. So what is this 40A2B? This 40A2B is a section which talks about related parties. Why are the transactions with the related parties are required to be given here? The reason being, this will enable the assessing officer to verify whether these transactions are genuine or not, if required on a later date. So this is basically a disclosure requirement, wherein if there are any payments to related parties specified under section 48(2)(b), those details are required to be entered in this particular clause 23. In this particular clause, in this table, those details, if any, the name, PAN, relation, nature of transaction, and the payment details are required to be given here. Clause 24. Amounts deemed to be profits and gains under 33AB or 33ABA or 33AC, so on and so forth. So what are all these clauses? As we have seen, this 33AB, as we have discussed earlier also, this 33AB is applicable for SSE in the business of growing tea, rubber or coffee, and it is contributing to the development fund created by NABARD, then out of that contribution, 40% will be allowed as deduction. Not just this, there will be a couple of other conditions also attached to this particular section. Say if those conditions are not fulfilled, then the details are required to be given in this particular clause. Because in an event where the conditions under which the deduction was allowed is not fulfilled, then it will be a deemed profit and gain under that particular section. So here in this clause 24, We are required to select the applicable clause and the description and the amount what is deemed to be the gain or profit under this particular section. Any amount of profit chargeable to tax under 41 and computed thereof. Here there are 5 to 6 subclauses in this 41. 41.1 talks about reversal or writing back of trading liability. Sale of asset of undertaking, depreciation on which is claimed under section 32. Sale of assets used in scientific research. Recovery of bad debts allowed earlier. Withdrawal from specific reserve, adjustments or set off of losses. We'll understand this particular points here. Reversal or writing back of trading liability. Say let's assume you have purchased goods from one of your supplier. You haven't made payment to that particular transaction. Even though payment is not made in that for that particular transaction, that will be allowed as expenditure on accrual basis. On a later date, if you are reversing back or writing back this particular trading liability, then those details are required to be given. Same is the case if you are claiming depreciation under section 32 and if you are selling that particular asset, then you are supposed to require to give details in this particular 41.2. And as we all know, for assets being used under scientific research, we have 100% allowance in the first year itself. So if there are any sales for these particular assets which are used in scientific research on which deductions are claimed, then those details are required to be given here. 41.4 bad debts. Say you have written off a debt as bad debt and you have got deduction. Say whenever a debt is written off as bad in the books of accounts, then deduction will be allowed. So once deduction is allowed and if there is any recovery from that particular bad debt account, then that information is required to be given here. In the same way, if there are any withdrawals from special reserve from which you have claimed deduction for transferring amounts to that particular reserve, those details are required to be given here. And then in the same way, adjustments or set off of losses are required to be given here. Let us see clause 25. As we have seen, all those details with respect to that particular section are required to be selected and those details are required to be given in this particular table. Clause 26. This is also one of the important clause as GSR Garu has covered in his opening remarks. These are all the taxes or duty or any other cess which is levied by a government. So let us read the clause first. In respect of any sum referred to in clause A, B, C, D, E or F. Okay, what does clause A says? Any tax, duty, for example, GST payment or municipal tax payment or property tax payment, cess or fee. Then clause B talks about any sum payable as an employer by way of contribution to any provident fund or superannuation fund, etc. So don't confuse, this is employer's contribution. In the earlier clause, what all we have seen is employee's contribution. C talks about any bonus or commission payable by the SSC to its employees, interest on any loan or borrowing from any public financial institution, any sum payable by the SSC as interest on loan or advance from a scheduled bank, any sum payable by SSC as an employer in lieu of any leave, is leave encashment. Any sum payable by SSC to railways for use of railway assets. If there are any sums which are payable in any of these subclasses, then these expenditure will be allowed only when it is paid. So the information which is supposed to be given in these points are what is the amount incurred, what is the amount incurred in the previous year, and out of that what is paid and then what is not paid. If there is any liability which is pre-existing, then if there is any payment from that pre-existing liability, then that information is to be given. If there are no payments from that liability, then that information has to be given here. We'll see this in the clause now. See, this is how the clause looks like. See, this is again divided into A and B. So first, let's analyze this A. Pre-existed on the first day of the previous year. So what does this mean? This is a liability which is coming from the balance sheet as on 31st March 2019. So this particular year talks about the liability which is pre-existing. That is the liability coming from the balance sheet as on 31st March 2019. And then this B talks about the liability incurred in the previous year. Okay. Say, let me take an example. I have a GST liability of say rupees 10,000 on my balance sheet as at 31st March 19, which is not paid in the previous year. So for which deduction is not available to me in the previous year. But I have paid the same sum in the current year. So in that case, the details are required to be given here. If they are paid in the current year. If they are not paid in the current year, then those details are required to be given here. See here, liability incurred in the current year. If there is any liability incurred in the current year, and if that is paid on or before the due date of filing of return, then that should be given here. And if that is not paid, that should be given here. See, in my example, say let's assume I have a liability as on 31st March 19 of rupees 10,000 and I have paid it in the current year. I have given those details here, mentioned those details here. If it is not paid, it is to be given here. If it is incurred in the current year and if it is paid in the current year, it is required to be given here. It is, in my case, it is not paid in the current year. So I have given those details here. Amount of clause 27. Amount of central value added tax credits availed or utilized during the previous year and its treatment in the profit and loss account and treatment of outstanding central value added tax credits in the accounts. Particulars of income or expenditure of previous period credited or debited to P&L account. So, although this talks about CENVAT credit, our GST credit is also included. So, our GST credit availed and utilized by the SSE during the relevant previous year is required to be given in this particular clause. How can we ensure this? Earlier days, it used to be very difficult to obtain what is the opening credit, what is the credit that is availed during the current year, what is the credit that is utilized for payment during the current year, and then what is the closing credit. For collating this information, it used to take a lot of time. Thanks to the GST, now our ledgers are being maintained by GST portal itself. As we all know, in our GST portal, we have our cash ledger, our credit ledger, and our liability ledger. So from those ledgers, we can extract what is the opening balance, what is the amount that is availed in the current year, and the amount that is utilized for payment in the current year, and then the closing balance. And prior period, to clause B, prior period income or expenditure is applicable only when the SSE is following mercantile system of accounting. If there is any income or expenditure which is relatable to the previous year, but it is incurred in the current year, those details are required to be given in this point B. We'll see if the clause now. I have taken an example wherein I have an opening credit of 10,000. I have a credit availed during the period of 20,000. I have a credit utilized during the period of 15,000. And I have an outstanding balance of 15,000 as on, and I have a closing balance of 15,000 as on the period end. And here, as I have told you, if there are any expenditures or incomes which are pertaining to the previous year, that is for the year before the current year, and if they are incurred in the current year, then those details are required to be given in this table. Clause 28. Whether during the previous year the SSE has received any property being share of company and not being a company in which public are substantially interested without consideration or for consideration as referred in section 56(2)(7)(a). If yes, please furnish the details of the same. Then clause 29 is also a similar clause. It says whether during the previous year the SSA received any consideration for issue of shares which exceed the fair market value of shares as referred to in section 56(2)(7)(b) if as furnished to details. In these two clauses, the words that are being used are without consideration, inadequate consideration. So in this particular clause, if there is any share of company not sorry, I've just plugged in my computer. This particular clause talks about if the SSE has received any property being share of a company. So if there is any property or share of a company received for no consideration or inadequate consideration. And this clause, if the SSE has received any consideration for issue of shares exceeds the fair market value. So this can be linked to our inadequate consideration. So if there is any receipt without consideration and if the aggregate fair value exceeds 50,000 rupees, those details are required to be given here. Inadequate consideration. So consideration which is less than the aggregate fair value of the property by an amount of 50,000. So those details are required to be given here. So if it is without consideration and if the fair value exceeds 50,000, those details are required to be given here. If it is inadequate consideration, which means the fair value minus the actual value, if the difference is more than 50,000, so those details are also required to be given here. Sum of money is received. Yeah, we will. There is also one more point here which says, I'll show you. Yeah, this one, which I forgot to mention in that particular. Yeah. I have forgot to mention one more point here. There is also one more point which says if there is any sum of money which is received as advance in the course of negotiation for transfer of a capital asset, and if such negotiations are dropped and the advance is forfeited, then those details are also required to be given here. So we'll see clause 28 and clause 29. This clause 29, if there is any property being share of a company received for no consideration or inadequate consideration, those details are required to be given here. If there is any consideration received for issue of shares which exceeds the fair market value, those details are required to be given here. This point is what I have talked. This is what this one. If there is any sum of money received for the sale of a, as advance against the sale of a particular capital asset, and on a later date that particular transaction did not crystallize and that advance is forfeited, in that case those details are required to be given here. Clause 30. Details of any amounts borrowed on hundi or any amount due thereon. This borrowing, what does this hundi borrowing mean? Nowhere in the Act hundi borrowings are defined, but CBDT Circular number 28 explains the scope and characteristics of said term to be promissory note drawn in a vernacular language. So if there are any monies borrowed against the promissory note, drawn in a vernacular language, and they are repaid otherwise than by an account payee check or draft, are required to be given here. We'll see that clause. Here the details are required to be given. Clause 31. This is also one of the important clause. So firstly, what is the requirement of the clause? Particulars of each loan or deposit in an amount exceeding the limit specified in section 269 SS taken or accepted during the previous year. So this particular 31st clause A point talks about loan or deposit. So loan or deposit means from a receiver perspective. So this particular point talks about loan or deposit from a receiver perspective taken in excess of the limit specified under section 269 SS. Okay. Clause B. For the time being, we'll ignore this and then we'll look at this T. Particulars of each repayment of loan or deposit in an amount exceeding the specified limit in section 269T made during the previous year. So these two are somewhat similar. This talks about loan or deposit which is received, which is accepted. This also talks about loan or deposit which is repaid. So let us look at these two ones. Any person cannot accept loan or deposit or any specified sum from another person otherwise than by an account payee check or account payee draft or use of electronic clearance system through a bank account. Okay. What is 269T? 269T prohibits any person to repay the loan or deposit or specified sum otherwise than by an account payee check or account payee bank draft or by use of electronic clearance system. Okay. Amount of loan or deposit or specified amount is 20,000 or more. So these 2 points says if there is an amount of, and there is also one more point which says sum total of loans, deposit and specified sum is 20,000 or more. Although we will see this with the help of an example, but the crux of these two is if a loan is received, say above 20,000, then if there is a loan above 20,000, then it cannot be received otherwise than by way of an account pay check or bank draft. Same is the case if there is a loan above 20,000 or 20,000 or above, then it cannot be repaid in cash. That is, it cannot be repaid otherwise than by means of an account pay check or a bank draft. What does this point say? We will understand this with the help of an example. Say I have accepted a loan one of 5,000 rupees, and now I am agreeing to see this 5,000 I have accepted in cash. So I have agreed to accept loan 2 of worth 15,000. So can I accept loan 2 of worth 15,000? There is a small mistake here. It's 10,000. There is a small mistake in the presentation. Say I have loan 1 of 5,000 and I also have a loan 2 of 10,000. I have accepted these two in cash or through bank, and now I have agreed to receive another loan of rupees 5,000. So can I accept this 5,000 rupee loan in cash is the question. No, because the sum total of all these three is equaling to 20,000 rupees. So that is what this particular point says. Now we'll talk about this point B, which we have left for the time being. This point B says 269 ST prohibits any person to receive an amount of 2 lakhs and above in cash in aggregate from a person in a single day, in a single transaction, in respect of transactions related to one event or occasion. So let us see this with the help of an example. Say I have made 3 sales. Sale 1 invoice amount is 1,50,000. Sale 2 invoice amount is again 1,50,000. Sale 3 invoice amount is 1,50,000. Can I accept the total of these 3 invoices 4,50,000 in cash? No. Can I accept any one of these 3 invoices in cash? Yes. Can I accept the second invoice in cash? No, because the total of 2 or more here is crossing the limit of 2 lakhs. So let us see this in the utility. First, it is talking about 269 SS, loan or deposit accepted exceeding specified limit. So here all the loans or deposits accepted exceeding the specified limit are required to be given. Here it says particulars of each specified sum. This is what is the point which we have discussed here. So if there are any sums totaling to which is crossing the limit, then those details are also required to be given here. 269 ST. 269 ST, in this first table, we are required to give the details of amounts received in excess of the limit specified otherwise than by way of an account pay check or bank draft. In this second point, we are required to give the amounts received by check or a bank draft not being an account pay check or bank draft. In this C, this talks about payments made in excess of the amount specified under ST, which is 2 lakhs, otherwise than by way of a check or a bank draft. This talks about payments made in excess of the limit by check or a bank draft not being an account pay check or a bank draft. This talks about T. T talks about any loans or deposits repaid in excess of the limits specified. So here all the amounts repaid are required to be entered. Here it talks about repaid otherwise than by way of a check or a bank draft. Here it talks about by way of a check or a bank draft, otherwise than by way of an account payee check or bank draft. So these details are required to be given here. So how can we obtain or how can we collect these details from our books of accounts? See, firstly, in our balance sheet liability side, if we verify, there will be two uh, sections, not sections. There will be 2 points by name: heads of accounts by name, unsecured loans or deposits. So get a list of party-wise list of unsecured loans or deposits. So in that, verify what is the closing balance of each and every uh, party-wise loan amounts. So if there are any loans which are exceeding the limit, then in that case, kindly ask for a statement of account of that particular party and verify whether there are any amounts received or amounts paid. This will do for loans which are having balances till 31st March. What about the balances which are closed during the year? Even though in an account, if amount is received in excess of rupees 20,000 or more, and that particular account is closed before 31st March, even those details are required to be given in this particular clause. So we have to first obtain details of the opening balances and the amounts received during the year, amounts paid during the year, and the closing balance of all the loans, tracking from the opening balance till the closing balance. So from that statement, based on the entries and the movement and the amounts received and the amounts paid, we have to ask for the respective ledger accounts of the particular parties, and then we have to verify whether there are any payments received or payments made. Clause 32. Clause 32 talks about details of brought forward losses or depreciation allowable to the extent allowable. See, there are few points which are required to be noted here. In the case of a company, not being a company in which public are substantially interested, and loss is incurred in any of the previous year, in loss incurred in any year prior to the previous year, loss shall be carried forward and set off unless the shares of the company carrying not less than 51% of the voting power were beneficially held by the same person. This says if it is a company in which public are not substantially interested, and if there is any loss incurred, to carry forward that loss to the next years, at least 51% of the shareholders holding 51% of the voting power should be the same persons. Loss in respect of speculation businesses can be carried forward up to next 4 years only, unlike any other loss which can be carried forward for the next 8 assessment years. We'll look at this clause 32. See, here the details of brought forward losses are required to be given here. If there is any change, if there is any speculative loss, those details are required to be given here. 33. Section-wise details of deductions, if any, admissible under Chapter 6A or Chapter 3 are required to be given here. What are all the deductions under Chapter 6A? 80C to 80 TTA deductions and 80 10A or 10AA deductions. As we all know, these 80C, 80D, 80CCD deductions are applicable only in the case of individuals and HUF. Only those details are required to be given. In any other case, those details are anyways not applicable. Those details are required to be given here. Say in my case, say let's assume I am an individual and I have a PPF payment of 1,50,000. So those details are required to be given here. Clause 34. Clause 34 talks about provisions of Chapter 7b. Chapter 17b or 17bb, which is tedious provisions. What is required to be reported in this clause? The amount on which tax is required to be deducted. From where can we extract this information? From the profit and loss account, from the various heads of expenditure. If there are heads of expenditure of this sort, say interest, say commission, say rents, say salaries, then you have to check whether these items are subjected to TDS or not, because we have limits for each and every section. Say if they are above the limit specified under those respective sections, then identify the applicable section under which the TDS is required to be deducted. Say if there is salary payment, section 192 is applicable. In the same way, the respective section is required to be identified. The nature of the payment will be salary. Total amount paid. This represents the total amount paid. This is the amount on which tax is deducted, amount of tax deducted or tax collected. Amount on which tax is deducted on the lower rate, and amount on which tax is deducted but not deposited. Say here we are supposed to report what is the payment. Is that payment falling within the provisions of TDS? If yes, what is the section? If yes, what is the nature of the payment, and then the respective percentage of deduction. After identifying this, what is the amount paid and what is the amount on which TDS is deducted? Say let's assume I have paid 1 lakh as rent, but I have deducted TDS on only 50,000 on the not on the whole amount of 1 lakh. So here when the amount paid is 1 lakh, but in my example TDS is deducted only on 50,000. So amount on which TDS is deducted at a lower rate is not applicable, but the amount on which TDS is not deducted is 50,000 here. So these details are required to be entered here. And also there are interests for non-deduction and non-payment or late payment of TDS. Even those details are required to be entered. So now let's look at the clause. See first, in this A, we are supposed to mention all the details as we have discussed. See here the TAN number, the respective section, nature of the payment, amount on which TDS, amount on which what is the actual payment is required to be mentioned here. Amount on which TDS is deducted. Amount on which TDS is required to be deducted. Amount on which TDS was deducted. Amount of tax deducted or collected. Amount on which tax was deducted or collected at a lesser rate. Amount of tax deducted or collected on 8. Amount of tax deducted or collected not deposited to the current of settlement account. So these details are required to be mentioned. Whether the SSC is required to furnish statement of tax deducted or collected. If there are any deductions made, then the SSC is mandatorily required to furnish the statement of tax deducted or collected, which is nothing but our 26Q and 24Q forms. So those details are required to be entered here. And if there is any non-deduction, late deduction or short deduction, then the respective interests applicable are required to be mentioned here. Clause 35 talks about quantitative details. Here in clause 35, quantitative details are required to be given. If it is a trading concern, then principal items of goods traded, for these items, quantitative details are required to be given. If it is a manufacturing concern, the quantitative details of raw material and the finished or byproducts are required to be given. Here, if it is a trading concern, the details of principal items traded are required to be given here. If it is a manufacturing concern, the details of raw material, finished products and byproducts are required to be given. Section 36 talks about dividend distribution tax 1150. Although this is the last year in which this section is applicable, say if it is a domestic company which is required to pay dividend distribution tax before distribution of dividend, then such details are required to be given in this particular clause. Section 30, clause 37, 38 and 39 all are similar. Say if there is any cost audit conducted, whether any audit conducted under Central Excise Act, whether any audit was conducted under Section 72 of Finance Act, if there is any audit conducted under any of these acts, and if there are any items which are disqualified or reported or identified, those details are required to be given in this 37, 38 and 39 here. 37, 38 and 39. If there is any audit conducted, then the respective yes or no option is required to be selected, and based on that this particular module will be opened and those details are required to be given. Clause 40. Clause 40 talks about accounting ratios. What are all the ratios that are required to be given? Number one is turnover of the previous year versus the turnover of the current year. Gross profit ratio of the current year versus previous year. Net profit ratio of the current year versus previous year. Stock in trade by turnover ratio of the previous year versus current year. Material consumed to the fixed asset to the finished goods produced ratio of the current year to the previous year is required to be given. Let's see that. This is how the table looks like. Here are the comparative ratios of the previous year versus the preceding previous year. Here I have considered this as current year, that is year 1920 financial year, and here it is 1819. So these details are required to be given. Clause 41 talks about whether there are any demands or refunds issued under any other act other than Income Tax Act and Wealth Tax Act. So if there are any demands issued or refunds received, those details are required to be given in this particular table. Clause 42 talks about if SSC is required to furnish statement in form number 61 or 61A or 61B. 61A is applicable when form 60 is obtained. See, there are certain transactions where PAN number is required to be obtained. If PAN number is not obtained, then form 60 will be obtained. In a case where form 60 is obtained, form 61 is required to be filed. Form 61 is required to be filed for specified financial transactions, which are basically cash transactions, like cash payment for credit card dues exceeding 1 lakh, or the total credit card dues paid exceeding 10 lakhs, as the case may be. So if an SSC is required to furnish any of these forms, then those details are required to be given. Then this talks about whether the SSC or its parent entity or an alternate reporting entity is liable to furnish the report as referred to in section 286(2). See, this is in the case of foreign group entities. In the case of a foreign group entity, if the parent entity is in India or its alternate reporting entity is in India, then it is required to furnish reports as per section 286(2). If it is required to furnish such reports, then those details are required to be entered here. So now we have seen all the clauses. We will also see now, how to e-file as we have seen, how information can be filled in form 3CB, from 3CD clauses 1 to 8, 9 to 20, and then 21 to 24. After filling the required information in each of these clauses, you can save this. And if there are any errors, then the error will appear here. See, here I have given that there is a deviation. When there is a deviation, details are required to be entered in this particular 14B. So this is what it is saying. See, you have opted that there are deviations, but there are no details entered in this particular clause. So let's assume that there are no deviations, and I'm saving it. So now it is getting saved. So you have an option to save it as an XML file. So I am saving it as an XML file on desktop for the time being. So XML is generated now. Yeah. Yes, XML file is generated now. Now I'll show you how to file our tax audit report. Let me go to our income tax e-filing portal. See, as we all know, there is an option to register yourself. So after clicking this option, in this drop down, there are options like individuals, if you are an individual, if you are an HUF, other than individual, external agency, tax deductor and collector, third party software utility developers. And there is also one more option, says chartered accountant. So any chartered accountant who is filing income tax returns online should register himself here. So after clicking here, you have to give all the required details here, like the membership number, enrollment date, your PAN, surname, so on and so forth. And if you continue, the registration will be successful. Since I have already registered, let me log in directly and show you how the registration of the accounts look like. Yeah, this is my CA login. If you see, this login is different from the normal SSE's login. I'll show you that also. This login is different from the normal SSE login. So let me log out this and then log into my this is my individual login. This is not my CA login. If you see, this is completely different from my CA login. So there will be a separate login which should be created for every chartered accountant who is filing his income tax returns online. So the first process for filing online is the SSE for whom this particular tax audit report is being filed should add his CA in this module. Here, if you see, there is one module by name My CA or ERI. Click here, and here add My Chartered Accountant. here, the PAN of the SSE will be displayed, and if we enter the membership number of the chartered accountant, his name will be displayed here. After this, we have to select the respective form, whether we are, we are getting our books of accounts audited under Section 3CA, or whether the form filed is 3CA or 3CB. So after selecting, say for example 3CB, we can select the year and then we should click the submit here. So once this is done, only then the authorized representative, who is the CA, can file the return. So after the authorization being given, then the CA has to log in his account, and then here there will be an option to file income tax forms. Here, if we click, if we enter the particular PAN number of the SSC, select the form, select the submission mode, filing type, and then the assessment year, and then our UDIN number, and then click this button, continue. Since I haven't given the authorization here, this is not allowing me. If at all I have given this authorization, then this would have allowed me, to file the form. Earlier, we have also downloaded one more utility, which is DSC utility. What is the requirement of this DSC utility? Just a second, let me authorize this particular application to open. Yeah. This is the DSC management utility. This is used to create signature file. So firstly, you should register with your login ID, PAN, and after inserting the digital token, select the USB token, the respective USB token, and then generate a signature file. So once signature file is generated, you have to upload the XML file, which is, this is the XML file which we have created. You have to upload the XML file here and then again sign with that particular digital token. So then a signature file will be generated. So after proceeding to the next page, you have to upload the XML file and the signature file which is created by signing that XML file. And we are also required to upload our balance sheet and profit and loss account in PDF format and then submit. After submitting, the process is not completed. Even after submitting, then the SSC has to log in with his login ID and password, and if you see, there is a tab by name work list. Here there is an option for your action. Here that particular form which is uploaded by the chartered accountant will be displayed, and here there will be an option wherein this form which is uploaded can either be accepted or rejected by the SSC. So once this is accepted, then the whole filing process will be completed. So this is how the XML file has to be uploaded. So with this, I am concluding my presentation and I am handing over the proceedings to Ravi Kishore.
Thank you very much, sir. That was a very wonderful session. First of all, you have explained the law relating to tax audit and also went into the days of introduction of the tax audit. Thereafter, you have given the law relating to the tax audit and also the procedure by which a form is to be filled. And also, you have demonstrated as to how it has to be uploaded, and before that, how it has to be, an auditor has to be, or a tax auditor has to be added in the SSC's portal, and thereafter, the way and method of affixing the digital signature and uploading it to the portal. Now, thank you very much, sir, for that elaborate discussion with regard to the law and procedure of a tax audit. I, on behalf of the Managing Committee of Vijayawada branch of SICASA ICA, thank you very much for accepting our invitation and enriching our students, particularly at the time of commencement of tax audit in audit offices. This will this session will definitely help them as an article student for the purpose of conduct of a tax audit, and they will be of a lot helpful to their principal auditors. Thank you very much, sir. And with this, we'll be closing the session and we shall meet in another session. Thank you, one and all.
Thank you very much, sir, for giving me such a wonderful opportunity.